Larry, I don't think I'm supposed to congratulate CEOs on their earnings, but you must be feeling pretty good.
David, good to be with you. You bet. Certainly proud of the performance the GE team put up for the second quarter, and really for the first half of 2021. We'll talk about cash flow, I'm sure, in a bit. But if you look at really across the board, we had a very robust second quarter. Orders were up 30% across the company, over 50% in our services business, which represents about half of our overall revenue across the GE portfolio today. Revenue's up 7%, margins up 1,000 basis points year over year, and we had positive free cash flow to the tune of $400 million, better than expectations. And that's really what led us today to take up our full year free cash flow guidance to $3.5 to $5 billion. I think those numbers underscore that there's a lot of day in, day out progress being made across the company. Mary mentioned in line with our long-term strategy.
So, Larry, just to gild the lily here a little bit, take us through that cash flow number, because it was not that long ago, I don't believe, when you and I were on together and you were saying, boy, it's going to look pretty ugly. It's going to be a big negative number. What's the swing on free cash flow over the last 18 months or so?
Well, I think we're certainly benefiting from the bounce back that we're seeing across the company. We're very pleased with the performance in our healthcare business, not only against 2020, but against 2019. We've seen a good growth there, and in our renewables business as well. Certainly strong margin performance in those two businesses, as well as in our power business. And aviation, which prior to the pandemic was our largest business and our largest cash generator, was hit hard, but we're seeing now the early signs of the recovery, particularly in our services businesses. So when you think about healthcare, you think about services broadly, and that aviation recovery at GE, that really underpins the cash performance here in the quarter and that revised upward guidance that we shared today for the full year.
So, Larry, stay with aviation for a moment. We'll come back to healthcare. And aviation, we've talked about it before. Obviously, the aviation industry was decimated by the pandemic. You track very carefully, as I recall, the number of flights, the hours in flight, because your services is so important to you. How far back are you at this point? How much farther do you have to go?
David, you're right. It's 6 o'clock every morning. I get a report from the team. We look at all of our engine platforms, departures by region. So it's a really good pulse on what's happening. The U.S., as you saw last week from the airline earnings reports, is almost back to 19 levels in terms of departures. China in a similar space. Europe has been catching up very quickly here the last couple of months, still down versus where we were in 2019. But the real soft spots today are in Southeast Asia, South America, and certainly on the transatlantic and trans-Pacific routes, as you would expect. But day in, day out, we see some of that continued progress. That translates for us, not only in terms of billings, because we basically provide power by the hour, but also in terms of our shop visit activity, where we repair these engines on a regular basis. We've seen our shop visit activity improve gradually here in the first half, and think that we'll see continued sequential improvement in the back half of this year. So it's early in the recovery. We're not changing our outlook. We don't think narrow body traffic is back before 23, wide bodies a year later. We really like the strength that we see in freight today, but by and large, the recovery seems to be underway. We'll take that for now.
Do you have any sense, Larry, of how vulnerable you are in those numbers to the Delta variant? Because there's an awful lot of talk today about a resurgence of COVID in the United States and elsewhere around the world. How could that, if it could, set back your aviation business again?
Well, and it's a big if, because we don't know, frankly, how governments or consumers are going to behave at this point. If we were to see the Delta variant play out in ways that led to travel restrictions, lockdowns, and a reluctance to travel like we saw a year ago, that clearly would limit departures. It would limit the requirement for services and support that we provide. So we'll keep a watchful eye on that, David. We're taking nothing for granted in this environment. But that said, we don't see signs today of that being a major impediment. But again, a watch item to be sure.
You also mentioned, Larry, your healthcare business. Give us a sense of that healthcare business, because people don't always think about General Electric in connection with healthcare. How has that been changed by the pandemic and the aftermath?
Well, David, our healthcare business is a $17 billion precision healthcare provider the world over. And what we've been excited about the last several quarters is not only a return to growth in that business, particularly off the COVID lows, but very strong margin and cash performance. Kudos to the team in that regard. I think what we see on the part of clinicians and providers in the public setting is certainly a good bit of investment for the next wave of healthcare, be it a reaction to COVID, let alone just all of the opportunities that precision healthcare provides for better outcomes and better economics.
Larry,
In the in,
sorry, go ahead, please.
and in the private setting, we're seeing similar investments picking up, which helps us not only in our core imaging franchises, but in our ultrasound product lines, as well as in our pharmaceutical diagnostics offerings, which have come back quite dramatically here the last couple of quarters.
Larry, one of the things that we talk to just about everybody about right now is inflation, whether we are seeing it, whether it's going to persist or not. What are you seeing in your business? Are you having to pay higher prices for the inputs? And by the way, are you able to pass along those higher prices to others if you're experiencing them?
David, I would say with respect to inflation and those cost headwinds, we're not in a dramatically different situation than many of the companies that you talk to. We see price pressure, we see shortages, semiconductors, resins, and the like. So we're battling that every day. But that said, I think in the second quarter, we really saw net deflation given the other cost reduction actions that are underway. We're watching carefully those trends in both directions as we think about the second half. We think we could see a bit more price pressure, but we are where we can not only trying to reduce our own input costs because there are ways to battle inflation, but where we can share some of that with our customers to be sure.
When we talk to economists about inflation, the possibility of inflation, they tend to focus on wage inflation because it tends to be much stickier than the price of goods or services. Are you experiencing wage inflation? Are you having to pay higher wages to get the employees you need?
David, I think it's early for us to answer definitively that we're seeing wage inflation broadly across the GE company today, but not unlike material input costs, we're mindful of what's happening out there and making sure that we're in the best position possible to deal with those pressures if and when they come at us.
And finally, you have a lot of employees. What are you anticipating with respect to, for example, mask wearing? We're told the CDC this afternoon is going to come out with some new guidance on that. Or maybe more to the point, requiring vaccines, because we're seeing a lot of employers around the country now requiring vaccines. Is GE going to require their employees to be vaccinated?
David, I think from the beginning of the pandemic, we've tried to do everything possible to maintain the safety of the GE team, regardless of where they work. That doesn't change today. We'll watch carefully the new guidance if that is forthcoming here from the CDC. In terms of a mandatory vaccine program, we have not put that in place. We have encouraged folks, we've educated the team at every turn. But given the nature of our footprint around the world, we haven't gone to a mandatory vaccine program at this point.
Do you have a sense of how many of your employees are vaccinated? Do you keep track of that?
We don't, very hard to do on a global basis given privacy rules and the like.